Hi everyone, my name is Vandita and thank you so much for joining me on my channel today. Well, today we would be talking about Parikh Flexi Cap Fund. This fund has been a very consistent fund over the last 5 years. In fact, much before that. Since inception, it started off in 2013. It started with 150 CR and right now the kind of AUM it handles is over 35,000 crore, from 150 crore rupees to 35,000 crore rupees. So you can imagine the kind of drastic change and how much this fund has grown over 10 years, right? So it has really been a very good performer. It started off as long-term value fund, then its name got changed to long-term equity fund, and finally it's called Parikh Flexi Cap Fund. It has been a very good performer, like I told, since 2013, how the AUM went up. But all of a sudden, when something really starts losing its shine, a lot of eyebrows gets raised, and a lot of investors they come up with a lot of questions in their mind whether they should redeem their investments, they should hold on to their investments, what do they really do with it? Because they really get nervous and skeptical about the kind of investments they do. Because I understand it's your hard-earned money. So let's try to analyze this particular fund. Let's try to see what is the investment philosophy of the fund manager and is it really worth it or not. You have to decide it on your own, but I'm here to help you in analyzing and I'll definitely give you my view around this. So like I said, it has, couple of positives which I mentioned. Another positive about this fund is it has always performed, in fact, outperformed its benchmark index, which is Nifty 500. If you look at the 10-year chart and you try to see the rolling returns of Nifty 500, Nifty 50 versus Parikh Flexi Cap Fund, then this fund has really done well over 10-year period that I'm talking about, right? So that's another positive about this. Important part here is the investment philosophy. Like I said, value investing is the core philosophy. They follow Warren Buffett's investment style. They try to buy quality stocks at reasonable prices. They look into behavioral finance. What I mean to say is they also look into the psychological impacts on the market outcomes, right? So they analyze a lot of those kind of things before they really put in an investor's money in various stocks, right? So if we look into their asset allocations, they're more into equity. Almost 85% of their allocation is into equity. Then around 10 to 13% is into the debt category. Rest is in cash and its cash equivalents. So that's the kind of asset allocations that they have done right now. They have also been investing in international market. That has been quite a positive for them. Around 25% of its investments is into international equity markets. FANG stocks, of course. We can exclude Netflix. Most of the money they've made is from Alphabet, of course. So the kind of allocations they have done are really good. Another very, very important thing about this fund is the fund manager did not change. Rajiv Thakkar is who's the chief investment officer of Parikh, right? So he has been the fund manager of this particular fund since 2013. And his management style and how he has been managing this fund is really shown. It's almost 10 years and you have to really agree with me on one part, at least this part, that, when a fund has been in the market for around 10 years, it means that it has gone through all the ups and downs in the markets. There has been COVID, there has been so many things, like even in 2018, there were some problems with this fund, and during COVID times, there was some problem with this fund. But this fund has sailed through all the ups and downs, and that is why this is one of my favorite funds. It has embraced volatility in a very, very nice manner. The fund manager really knows how to work and get the returns that they're looking for their investors. So these are some of the major positive things that I really want to talk about. The large size of the fund is definitely one positive. It has negative impact too, which we can talk about, which we would be talking about. But right now, what I'm trying to say is that you have to really look into the fund management style of the fund manager, right, which plays a very critical role in analyzing a particular fund. The kind of churning is also very important. There's so many funds, right? When a fund manager invests certain money in one stock, maybe they feel, okay, I want to just move this money to another stock, right? So that's called churning. But here, the churning is so low, even in 10 years. So the kind of conviction that the fund manager has on its fund or on the stocks is really very strong. And that is again another positive. The churning of this portfolio, of the portfolio for this particular fund is less than 4%. ICRA, Axis Bank, these are some stocks that are part of this of the portfolio since 2013, since inception. So that's what I'm trying to tell you, that it has been a very consistent performer. So there are a lot of positives here, like the ability to limit the losses during market correction, the kind of rolling returns that they have generated over 10-year period, and the kind of investment philosophy they have been using in terms of something like investing in low PE companies, quality stocks. They really know the market. That's what I'm trying to say. And their performance talks all about it. They have been investing in international markets. Having said that, this fund really had to face certain challenges in February 2022, right, beginning of 2022, when SEBI came up with certain restrictions on overseas investments. This particular fund has around 30% of its allocation in international market and foreign equities. Because of this particular restriction, when you have a very large fund size, it becomes really difficult for a fund manager to think where to put this amount, right, with stocks. And we need to understand that they follow value investing style. Their investment philosophy is value investing. What the market is thinking, they really think beyond that, right? They feel that this fund, these stocks will perform really well after some time, and market right now doesn't recognize these stocks, right? But the fund manager has that kind of conviction. So it takes time for value investing approach to really show, right? Because of that, this fund had to face the heat and is still facing, of course, not that much. It has started recovering. The NAV has started moving up since June 2023, right? But of course, this is one of the major challenge that the fund manager is facing because of the philosophy. Right. Well, if I have to give you my opinion on whether you should be continuing with your investments or you should hold on with your investments, I would say yes, please do that. Continue with your SIPs. In case of emergencies, of course, you can redeem your investments, but if you can continue, please continue. Will this fund perform well in the coming years, in the coming months? Well, my answer to it is yes, I think it will. Why? Because I'm quite positive about the management style and the value system of this fund house. That's number one. Number two, that of course, large size of this fund is one drawback, because this fund has been investing in international markets, and now that would be a challenge. But India has a lot of opportunity in terms of market size. If we look into the mid cap segment, small cap segment, it's a huge opportunity, right? And I'm sure the fund manager will find out a way to invest in domestic equities as well, on what to do with regards to that. So I am quite positive on the management style. Third part is the ability of this fund to limit the losses during market correction. I would give it 10 on 10. It has demonstrated and exhibited that over 10-year periods, right? The kind of rolling returns and whatever the performance have been, it has sailed through that. So I am quite positive, and the churning has also been quite less. The fund manager has been there since inception, and overall it looks good to me, and I think you should hold on to this. I'm sure this fund will recover. We have started seeing recovery since June 2023. Well, I would say that the fund has embraced volatility quite well. It has picked up the pace. The financial ratios looks quite positive. So we can wait and watch, and let's see how the fund pans out. That's all for today. Thank you so much for listening to me.